big family, good day, good day. It is your boy once again, Mr. Paul SA, your mentor. So, guys, this is the Igtv episode 3, and I'll be uploading more. So, please share this video, please share this Igtv with your friends and family, and also on your stories, guys. Please do the most, please do the most. Now the target is 1000 followers. I'm looking into getting 1000 followers. Please do the most, guys, for the boy, and I'll also keep on creating content for you guys, and I'll also keep on sharing setups on Telegram and also on YouTube. And I'm posting this IGTV also on YouTube. So to all YouTubers, please don't forget to give this video a thumbs up, and also the Instagram people, and also don't forget to subscribe and share with your friends and family. Also hit that notification bell so that whenever I post it, will notify you. So today on the IGTV episode 3, we're looking at Usdzar. We're looking at Usdzar. So let's just start from the H4 time frame. I was analyzing Usdzar. So let's just start from here and see. So as you can see, guys, the market was actually in a bearish momentum. And we had a correction over here. So after this correction, we had our first move and a bit of a correct. We had a first move and a bit of a correction. Then the move went up, and a correction, and the move went up, breaking what? Breaking our structure. So this is a break of structure, guys. This is a break of structure. We broke this structure to the upside. So with this movement that we had here, we immediately, when the market breaks structure, obviously to mostly this side, it means that it's actually a buy. It means that the buyers have now taken over. But as you can see, the market went back inside, and it's giving us a correction inside, and it's still going down. So we are not sure what it's trying to do, but as I see, I think it's trying to come to this level, giving us a bit of a dead touch, then shooting upwards. So let's just go to our H1 time frame, and we'll be able to see um, with a clearer vision and a clearer chart. So I analyzed this before, guys. As y'all can see, we have a beautiful trend line over here. And by the way, guys, I haven't mentioned this, that I've now upgraded my methodology. I'm now using both retail trading strategy and also institutional trading. So I've mixed it a bit, but at the same time not confusing the two. So I've said this on my YouTube video that I'm now using also the institutional trading, because I saw the flaws of my strategy, and I saw how I can upgrade it, and I've actually upgraded it. And with the retail trading, most of the time we do not have an opportunity to catch bigger risk rewards, and also sometimes we do not understand what has why has the market moved in this way. So that is why I decided to join the institutional trading, and it helped me a lot. So over here we have an OB, guys. We have an OB, order breaker. We call it an order breaker, guys. So I'll just take it through to this part where I see to where the market is. Then let's just do this. This is our OB level, guys. This is our OB level, order breaker. Okay, then immediately after our order break, after our B, you can see that the market has broke out of the structure and came back and corrected actually. Then we had a bit of a a correction over here, then the market broke the correction, then that is when you can also take your trade, or you can take your trade after the rejection. But the rejection was only candles, was only candles. The market did not shift up and then came back, so it was just candle. But with a experience, you would have taken the trade to go upward. So the market was playing inside this channel. But as you can see over here, the market has turned. So why have the market have turned? Uh, we have also another channel that was playing inside over here. So this is the reason why the market has turned, which is our second touch. But obviously, from this, most of us would have not taken the trade because it had not, it had no a bit of a confirmation, a better confirmation. But yet, with the institutional trading, we know one thing, that there is one thing that we use also. It's called imbalance. It's called imbalance. So it's when actually the buyers, you find that it's an example, you find that we have the buyers, then now the sellers are about to take over, but yet the sellers are taking over. They just wanna, the buyers, the sellers, I mean, wanna recover the movement that the buyers have taken. So we had an imbalance. Oh, what's happening now? Okay, guys, let's get back to our chart. We had an imbalance. I'll show you the imbalance that we have spotted. So we had an imbalance over here. You see the buyers were here, then here is the buyers, then the sellers broke this level, which you can see where the sellers have taken over. So it's like a bit of a gap, but a candle gap. So it's a bit weird, but immediately when you get into institutional trading, you will better understand. So most of the time, guys, I just want to show you something before I can put on my my imbalance level. You can see over here, most of retail traders actually would have at least taken the trade after this correction, after this beautiful correction, the break of it, they would have taken the trade. Which I've calculated it that I'll show you the calculation, but they would have taken the trade after the break of this first correction. Then, if maybe you are taking this trade as a risk entry, at least you would have taken it from these two candles. But yet, let's just see how the institutional trading tells us and how it finds its entries. So over here we had an imbalance. I want to show you how we draw an imbalance. We had an imbalance over here. So with this imbalance, you can see this is an imbalance. Let's take it to the side a bit, and let's do this. I'll just name it IM so that it may not be long, or let's just put it as IB, imbalance. This is our IB, which is imbalance. So as you can see, the market, this was an imbalance. The market shifted downwards and came and retested this imbalance. As retail traders, we would have placed our order right from that imbalance, from over here, and our take profit being at least over here. But always when we move into profit, you must always put your stop loss onto your break even, and also just trail stop, because you might not know, the trade might end over here, because this is also a point where the market has actually turned. It might end over here, it might also end over here. So but this is our now we are jumping back into the retail trading. After the break of it, we are expecting a 90% rule. The 90% rule is this level. So we're expecting the market to come to this level. But yet, we had this structure inside. This structure also, if maybe the market broke and wanted to support only the 90% rule of this structure, the 90% rule of this structure is over here. So luckily we were able to break that structure and move downward. So we're expecting the market to actually come to this level. But let's now get back to our imbalance. Our stop loss being over here. This is how retail trading is. And this is USDZAR. So the pips are not the same. And you it's exotics. It's exotics. You won't see it like currency pairs. You won't see. But if it was currency pairs, you will see how much pips is our stop loss. Most of the time, you find that it's only 10 pips, 10 pips stop loss, which is not a lot. Sometimes it's about 6 pips. So that's how actually we are able to have a good risk reward. Look at our risk reward now. It's about 32. It's 39 risk reward with our take profit over here. And the trade is still running into profit. The trade is still running into profit. It's about 50% away from our take profit actually. Then this is now where our people want to take the trade, our retail traders. As retail traders, they want to take the trade after this beautiful confirmation. Because as you can see, retail traders, we want to see after the break, we want to see a bit of a at least small correction. Then after the correction, we go down. But as you can see, this impulse down, there was no correction, and the correction only starts now. So let's just draw our trend lines on the correction. So here's the correction that we had. Here's the correction that we had. Then we had a break over here of our trend line. We have a break of our channel. Then over here, this is a retest. This is a retest. A retest. It was we had a break of structure over here, guys. We had a break of structure over here. A break of structure clearly basically tells us that the market has now went into the sellers. Now the sellers have taken over. So it was just a buying momentum, and we saw this sell as a correction before it can just jump into breaking the structure. So now that it has broken the structure, now we have confidence saying that the market is now in the sellers. So let's just this is our break of structure. This line is our break of structure. The market broke it, and again it retested the break of structure. So now this is when the retail traders actually take the trade. And I missed this trade. I missed this big trade. So I'm also taking it like retail traders. Uh begging about 1:7 because I've made some calculations. So with a bit of a stop loss of over here. Yes, it's 1:4. Yeah, it's 1:7. I mean, yes, it's 1:7. 1:7 risk reward. Whereas over here, it's how much is 39. So you can see as institutional trading plus retail. Basically now it's how much? It's about 46 with this two trade because I'll be also considering to take this trade if I would have taken this trade. Okay, let's just move this one. Then this trade now it would have been on my break even, or I would have moved my stop loss a bit over here, but actually not there, but at least over this level. So now this one is safe. Now this one is safe. Then we are dealing with this one. This one is already triggered in. This one is already triggered in, guys. If you can see, well, it has already triggered in and it's still going. So this is how I'm able to actually capitalize, and I'm able to bag so much pips with the institutional trading. Look at the stop loss of this one and of this one, and with of actually the institutional trading and with the retail trading, there is a high difference, guys. There is a difference. So the retail trading has already triggered in. uh Unfortunately, if maybe if you're seeing this video late, uh you have missed this trade, but it's not a problem because the most important thing is to see how I actually analyze, and you'll be able to also a bit apply the same to your own charts, even though it's not a lesson, but you can actually see how I come about saying that this is going to happen. So I'm also expecting this, as you can see guys over here. If the market can break, yeah, it's breaking, it's even breaking the structure. So even if you miss the trade, you can take it after the break of structure, even if it's a bit riskier, but you can take it after here. You see it broke the structure again with this candle. So now I have much more confirmation that the market is going down. Then another break of another point which the market can come to is this one, which we had a point of interest. We had a point of interest, or I can say we had an OB. Is this point? We have this point, and also we have also this point. So it's 2 points that we have that the market must break. Yeah, it's 2 points that the market must break. Also this one. Then afterwards, we are just heading to our take profit. But with what I've seen now, I can say that the market is still going down and it's gonna come to our OB. So guys, it is your boy once again, Mr. Paul SA, the CEO and the founder of CroFX, and this is the market breakdown of Usdzar, the Igtv episode 3. Please do the most, guys. Share this video. It's helpful for another, it will be helpful for another person, and it will also be helpful to you. Not only it is helping you, but you can also help another uh Instagrammer. You can also help another family, another friend, or another neighbor. So please do the most, guys. It is your boy, and I'm signing out.